What's going on, everybody, and welcome to Futures Trading with NinjaTrader. Some people trade stocks, some people trade options. I'm all about learning how to trade futures, but before we get Jim up here, let's go to run that intro for us. What is going on, Jim? Folks, this is Jim Cagnina. If it's your first time watching, he is a senior education and training specialist over at NinjaTrader LLC. Jim, how's it going?
Zunaid, great. It's great to be here. Everything's going good. We got a lot of stuff going on this week. It's an exciting time.
Yeah, I love hanging out with you on Mondays because it kind of sets the tone of what insight you have for the rest of the week as well, right? So without even wasting any time, I've got your charts up here. Let's go. I mean, what you got going on here? We'll dive into all types of stuff, by the way, chat. We'll dive into crypto, oil, everything, FOMC coming up. I know Jim's got some insights there. But let's just start off here since it's on your screen. What's that?
Yeah, I'm looking at all right. So some of your viewers might be familiar with the QQQs. This is the micro Nasdaq stock index futures, and it's a very popular futures contract. It's basically the futures on the Nasdaq 100. And, it's a tremendous amount of volume. Today so far, we've already done 639,000 contracts. You can see on my quote board here, the symbol is MNQ. And I just, I'm looking for a day trade ideas, and I have a couple of ideas right now that are percolating.
Gotcha. And so if I understand correctly, you're looking to go short around the 12,368 area. Is that correct?
Yes, sir. And that's for 2 units. And I'm keying off of a couple things. I'm keying off of that 38.2% retracement, this Fibonacci retracement that I have on there. And I'm also kind of looking at the candles, right? We have a series of higher highs and a series of higher lows. That's starting to slow down a little bit. And a lot of times when it does slow down a little bit, then the candle that's brewing right now won't have another higher high. I could be wrong on that, but the beauty is if I am, I'm going to pick up a third unit and kind of, average in a little bit once we get up to that point of control, which is where the most volume is traded so far today at 12,404.
Now, if we go now, see that 10-minute green candle, right? Say if it doesn't get up to your target, but it kind of comes down below any area, is there an area you like there to go short? Or are you more so thinking, hey, no, I want it to come to me and then I'm going to go short. I won't necessarily try to chase it here. You know what I mean?
Yeah, great question. And, with these markets being as volatile as they are and, nothing goes in a straight line usually, I am against chasing, right? I want to come up with a game plan. I want to implement the game plan. And then, and I'll have rules associated with it, right? So right now, this is the game plan I'm trying to implement. And if I don't get it, so what? I don't get it. There'll be another setup, another day, another time, another market. There's always setups, right? So chasing usually does two things. When you chase on an entry, you oftentimes you would have had your original entry if you were patient, right? And so just set aside FOMO, fear of missing out. If I miss out on this, okay, there'll be another one. I'm not scared of missing out, but I'd rather have a better entry to give me some better risk management.
Now, look, I'm going to ask for your 2 cents here because I'm in a trade. It's not with the futures. It is with the Qs as well. But I do want your insight. I know you gave your, sells here, but do you think this is a solid game plan right now? I'm short the Qs off of the 301 because I don't want it to crack above 301.50s. Knowing what you're seeing in the charts here, I know you're looking to go short a little bit above, but do you think I've got a good chance here of a better risk reward, or do you think I should probably be patient and look at the areas you're looking at here?
Well, no, I mean, you're running up against a couple of things that we have to worry about. We have earnings, right? That could kind of mess with your outcome of the positions you have now, and you could have, and again, we have FOMC on Wednesday and other stuff. So that kind of uncertainty is in front of us right now. The only thing, in my opinion, that's really going to move something right now in the Qs or the stock index futures is earnings, right? I think there's this anticipation mode we're in today and tomorrow, and we kind of end up generally close to where we're starting when we get to Wednesday from the beginning of the week. So that's really, that's it. It's earnings right now for today. All the economic news is out. It's done.
Yeah, I got you. All right, cool. We looked at the Nasdaq stock index futures, the micros. Let's go ahead and move on to the SPY part of it, to the future side of things. What do you have here on the index futures for S&P?
So real similar. It's trading right at the VWAP right now. So it's a little bit stronger than the Nasdaq. We're pretty much unchanged since the last session, which was Friday afternoon. And, right at this point of control here, a lot of volume here. We're just south of it a little bit. But I expect the same kind of pressures, right? And, we had our opening range, the high of our opening range that's associated with the, the cash market, the New York Stock Exchange, et cetera, et cetera. And then the low of the opening range, I expect us to trade between that today. We might, peek through a little bit like we did in these candles down here. We might peek up a little bit, but that's my expectations. Again, I could be wrong, but I feel like we're going to be in anticipation mode and go sideways here. And remember, S&P 500 is a lot bigger than the Nasdaq, so it's going to be harder for any particular earnings to kind of really push this out of its pocket.
Yeah, and you can see it kind of barcoding and just kind of consolidating between those two levels of 39.75 and around 39.50s. So about 50 points, if you will. Now, I see that you don't have any trades put on here. Is that because you like the levels on the Qs better, or is that just because you and I were talking about the Qs before we hopped on the show and that's where you wanted to put it on? I guess what my question also is, are there levels here that you would love to go short, or do you just like the Qs a little better?
Yeah, no, well, so yeah, the first part of your question is me and you were talking about it before we started, so I started focusing on it for sure. Again, these markets they always don't move in the exact same direction all the time. They're not 100% correlated 100% of the time, even though they're US-based stock index futures. So their patterns are different, their support and resistance are different. But here we have some really keen areas of interest, and I'll point one out right now. We have literally this pivot. A pivot. This is just a daily pivot, nothing special about it. 39.74 will round, 73, you could round it up. We have the first standard deviation band of the VWAP touching it, and we're pretty close to that 61.8% retracement. And if you notice, pretty much most of the day we've been trading within the first standard deviation band around the VWAP, and I don't expect much of that to change. So from a trade idea point of view, I would say, hey, let's target this range. Maybe we'll try to sell one at that 61.8%. Give us give volatility a little respect here. We could punch up here a little bit, and then on the downside, I'm going to do the same thing. I'm going to go down to the bottom of the value area. I'm going to look at the bottom of that VWAP here, and there's no retracement number anymore because we're close to the bottom. And I'd say, if we get down here, I want to go long. I want to buy. Yeah. So that I'm kind of, I know I'm stepping around the market right now, but again, right now it's looking like it's going to be a range bound deal. And just to kind of put icing on the cake, the bottom of the opening range was 54.25. The top of the opening range is right where we're trying to get short. Another area of interest, 94.5. And then we have clear and pleasant places to put stop losses. If we're wrong, which we could be, on the top side, we put our stop, above that 76.4, right, probably near that. Above that VWAP, second standard deviation band. On the downside, again, second standard deviation band is a pretty good place for a stop as well if we get long instead.
Now, if you go ahead and sell short at the 37.74.50 area, where do you think your stop loss would be?
So I'd probably, and I could put it in here right now just to kind of show you, I would probably put it up. Again, I want to just kind of look at the volume profile, have a reality check here, just to make sure there's not a big volume node. There's a small volume node here. I don't know how significant that is. I think that's negligible. So again, I wouldn't be at it. I wouldn't be, and this is a micro, so I can give myself a little bit of more breathing room on this. If this were a classic, I'd change my mind a little bit. But for now, I'd be a little bit south of that little volume node here, and I'm just going to throw it in. Again, boom, one lot. Now remember, this is a micro, so it's a percentage of the regular classic E-mini. So if you wanted to do 20%, then this would be a 2-contract trade. If you wanted to be 30%, it would be a 3-contract trade. So it's kind of, based on the risk reward that you feel is right for you.
Gotcha. All right, cool. Now let's move on to, we looked at the Qs, we looked at the SPYs. Let's go ahead and check out Bitcoin. I remember you had a possible position there, or maybe you already had one there, but let's go and check that chart out for.
Yeah. So on the position I had that we talked about earlier, I was stopped out on it.
Got it.
I'm 100%, transparent here. It was a loser. Yeah. And what happened was, we had this is a daily micro Bitcoin chart. we made it, we made a low here, and I drew a rectangle here on the bottom to show a really strong present area support, and it held. It had held 18,430, give or take. Bounced up, tried to get back down, bounced up again, and we retraced. This is almost textbook perfect retracement. Now you open a textbook up, this chart should be there, right there. We hit that 38.2% retracement, and things started selling off again. So that's kind of perfect. But my stop loss was a lot tighter. I can't remember the exact number. It was probably around the 23.6 when I said, all right, I don't want to be short anymore because, it's risk management time. I was wrong. My opinion was wrong. I'm out. And that was that. So that was the result of that. Right now, it's looking bearish again, right? The moving average cross here is kind of tangled in love. They're touching each other. But the 23.6 is right where we're at. So I'm going to rely on fibs here as well. Looking negative. I'm not as bearish as I was over here, but right now I'm a little bit bearish here. I don't know if we'll test these new lows again, but it's something to watch over the upcoming days.
Gotcha. Now, let's go back to the Qs real quick if we can. You can see if we go back to the Qs here in a moment, they are now starting to come down just a little bit. So we'll keep an eye on it, see if it continues to flush or not, because you do have now that S1. I assume that's support level 1. Is that right?
Yes, 100% correct.
Was that there before that wick, or was that there, or does the compute have that after the wick? You know what I'm saying?
Yeah. So this is based on the range from the previous session. So that's there right away. That's always there.
Wow. So the reason I ask is because, you hear so many times about pivot points and this and that I'm not going to get computed. I've always been kind of curious on how accurate they are. Of course, nothing in life is 100%, but I was just curious on, have you found that to be 51% of the time accurate?
Well, so pivots are based on the previous day's, range. And I'm surprised at how often they come true, right? They're real areas of support and resistance. And a lot of times what you'll see is S1 holds, like, we'll trade around it a little bit. A couple of candles will trade around it a little bit, but it'll basically hold. And there's other times when it blows by on trend days. It blows by so quick and powerful, it's not going to hold. Right. Yeah. It. I mean, it's just continuing selling. And then you're going to get to that, 10% level where it's like, all right, we're heading toward S2 maybe. Right. And S2 might not be achieved, but velocity of the candle is going to tell you, at least to me, more times than not, if that S1 is going to hold or not. Right now, my guess is, given all things equal, S1 will probably hold only because, again, we're waiting for Wednesday.
Now, well, let's dive into Wednesday. Well, actually, here, we'll talk about Wednesday here in a moment around the 20-minute mark. But do you have oil or any other commodities that you wanted to kind of take a look at, or any other charts that you're a fan of today?
Yes, for sure. Let's take a look at crude oil right now. This is really, this is keen, right? So we're talking about we want a recession, right? Fed wants a recession. They're not going to say it, but they want to slow things down because their priority is inflation, right? So here we have a really nice picture of crude oil, less than $100. And it's there's a supply and demand equation here for sure, but this is suggesting things are slowing down actually in the economy, and we're not surprised, right? So, right now, no, we're not going to have, $150 crude as, Goldman was predicting or whatever. Doesn't look like it. We're in this channel. It's an $8 channel that I have here sloping downward. We've been in a pretty negative kind of, disposition ever since June 14th. Now, these are giant candles, folks. So you have to really be careful. A lot of volatility, a lot of uncertainty, but overall the trend's down here in crude oil. So again, I'd be cautiously looking for places to sell on an intraday basis, and then keep an eye on the US dollar as well. But from a day trade point of view, we have a lot of volume right here around 95.59. I expect that to be more of a magnet as the day goes on. And the other thing that I'm thinking behind my neck in my head, behind the back part of my brain, we have another volume node that happened earlier this morning, closer to S1 at 93.79. It's called a double distribution, but the contemporary distribution's at the top. So again, I would be looking for places to sell, but I'm going to be super patient here because these daily candles have been pretty brutal. R1 is right here. right? This is another pivot number, R1 on the top here. So it'll be somewhere between the highs of the day and R1 might be an opportunity to try to sell crude oil today.
Okay, gotcha. We'll keep an eye on that. Well, let's now kind of move forward towards. Did we talk about corn ever on this show? I feel like we may have. I'm not quite sure.
Yeah. I
Is
don't
there
really
anything
look at
there?
it. No, I mean, right now,
Okay.
corn's reflecting the same thing crude oil is, right? So
Makes
prices are dropping, right? And again, supply and demand. I know there's a weather function going on right now, which could impact this, but basically, general terms, it's breaking, right? We're in a negative channel here on corn, and I would not be a buyer right here at all. I want to see an area of support generate over a couple of candles before I say, okay, let's look for a retracement back up. So just as a general matter, corn seems to be going down.
Now, I do have a question in the chat from Anissa saying, what do you think about the euro compared to the Swiss franc? I believe this might be more on the Forex side of things, but do you have any insight here?
Yeah, so and I have the quotes over here on the quote board right here. So and hi, Anissa, how are you? Good to see you here. The euro right now is, it's in an interesting position because there's a lot of dynamics going on with respect to what the ECB is doing with interest rates. And there's a lot of projections, just like here in the FOMC, what they're going to do. They're going to be way more dynamic and probably a little bit more controversial on with respect to different opinions within the ECB on what to do for interest rates, especially in light of the nat gas problem they have. So it's going to be more volatile, the 6E, is what I'm trying to say, and probably weaker versus the US dollar. The Swiss franc's a completely different animal. The Swiss franc is, it's a very conservative currency cross. It doesn't move as much as usual. I don't know what the Swiss franc euro cross is looking like, but I'm voting for the Swissy to be a little stronger than the euro over time.
Gotcha. All right. Got it. Now let's move on to, let's see if you have a tip of the week for us here. But of course, as we get things going, I'm going to go ahead and play the intro for the tip of the week. Perfect. Right on cue. What you got?
All right. So there's three really competing crosswinds here this week. We have FOMC on Wednesday, right? About 77% chance, give or take, that we're going to have a 75 basis point hike, right? And there's a smaller percent chance we're going to have 100%, 100 basis point hike or 1%. And that's kind of been relatively stable after the last few days. So everyone's expectation is three quarters or that kind of raise, that kind of hike. Then we have earnings. 30% or so of the S&P is announcing earnings this week, a big number. That's the other thing that traders are going to look at because they really want to know, hey, jobs are strong. Our earnings going to be robust, even in the face of this interest rate policy that the Fed's kicking in. And then lastly, the third thing to keep in mind is Thursday, we have GDP is going to be released, right? The day after the FOMC. And that's going to be released for Q2 data. Remember, Q1 data was negative GDP. A lot of folks expect Q2 to be negative, which then, by definition, is supposed to say, hey, we're in a recession right now. We don't know yet. We won't know until Thursday if that technical definition is met. And I know people are trying to change the definition. It's driving me crazy. But those three things here are all competing factors of what's going to happen the rest of the week. So starting Wednesday afternoon and Thursday and Friday, I think we're going to see a lot of volatility.
All right, now help me out here. I'm going to pivot here a little bit. I know you just said they're changing it, but what has been the standard definition, in your opinion, of a recession?
I think when you look at charts and statistics by not only government agencies, but other folks, it's been this 2 consecutive quarters of negative GDP growth, right?
Got it. Okay.
Now politicians don't, they want to say, well, we have a strong labor market. So even if the second Q2, and I'm not calling anybody out, I don't want to call anybody in particular.
We're looking at it. Yeah.
Just because you have a second negative GDP number with, jobs being as strong as they are, earnings being relatively decent. No, we're not in a recession. So, this is a matter of opinion, and you hear a different opinion on, Reuters, Bloomberg, whatever you're watching. But I'm sticking with the textbook definition. And when you even look at those charts when they, you'll see like little highlighted gray areas, gray columns of that we were in recession in these years. Here's what the chart did. And, they were using those two GDP quarters.
Got it. Now, when does the earnings, obviously it's all week long. FOMC is on Wednesday. GDP is on Thursday?
Yeah, let me just pull up a calendar here real quick. A calendar day calendar. So, again, Wednesday at, FOMC announcement, 2 p.m. East Coast time. And then, they wheel out Chair Powell and he does a speech and then uncomfortably takes a bunch of questions after that. So those two events think of them as independent events because at 2 o'clock, the number comes out, probably what we expect. And then the Fed, though, sometimes he says stuff that the market likes or doesn't like. So that's at 2:30. The next day, GDP is at 8:30 in the morning, early in the morning. So pre-market GDP is announced the next day on Thursday, July 28th. So that's kind of the schedule looking forward.
Got it. Let's go ahead and take a look at maybe a bigger picture on the SPY as well. Do you feel like we are still in a long-term downtrend, or do you have any levels where you're kind of like, this is what I'm focusing on the daily? I know we looked at the 10-minute earlier, but I want to take a little bit of a zoom out approach on here as well. And then I'll get to a couple of comments possibly.
Yeah, great question. You're thinking right. We're literally, here's my daily chart. There's all sorts of levels going on here. So we had a ascending triangle starting to develop here that we broke on through. We closed above it 1, 2, 3 times. I have a dotted line here around 39.51. That was old resistance. Now it's support, and we keep touching up against it. It also corresponds to this 50-period moving exponential moving average that I have here, that black line that's kind of sloping downward. And then I have a rectangle on top saying, not a lot of data, but so far this has been a nice area of resistance, and we're trading in that rectangle. So a couple of things I'm thinking, on the downside, if we start closing below this line again, we got a 50% target. I'm going to extend my triangle line a little bit further. And we also have a 38.2% target. And on the outside fib, a 39.13 target. So this line's kind of important to me. We'll see where we're at on Friday. If we're still closing above this on Friday, that's going to suggest to me, if we go all the way to the left here, in this end of May, beginning of June range, we could end up creating this type of pattern, sideways pattern, range-bound pattern, especially since it's going to be August. There's no, Congress is not in session anymore, and they're all taking the 6 weeks off, going to the beach, doing whatever they do. So that's what I'm thinking. We'll see if we stay above. This is a key level, super key level, 39.50 right here.
39.50. I've got that one written down, and I agree with you, especially because of the whole number there. It should be interesting. Now, by the way, I want to unplug this in. Of course, Jim and his team, they go ahead and trade every morning and evening as well. I'll let him talk about the evening part, but every morning at ninjatrader.com/events. But you also have a show. Well, what time do you guys start in the morning? Let me go with that.
Yeah, so the opening range show starts at 9:15 East Coast time.
Got it.
And it's about an hour. And, we look for trade ideas. We talk about a lot of the same stuff me and you were talking about.
Yeah.
And we actually try to get a game plan and throw a couple of trades in simulated live mode just to kind of test our theories out. And then we kind of say, all right, lessons learned. Did this work? Did this not work? If so, why? If not, why? That's kind of in the morning there. That's every morning, Monday through Friday. We bookend the day with a show called Bars Closing, and that's at 3:15 East Coast time for an hour. And then we kind of recap the day and then see if there's any trade ideas, that are on the radar screen for the close. Those are at the bookends. And then on Tuesdays, Wednesdays, and Thursdays, we have some shows in the middle also.
Gotcha. Love it. And exactly. Go ahead and check out ninjatrader.com/events. You can see the scrolling information. It's also should be in the description as well. We took a look at now what area, you said the 39.50. If we stay above it, that's a little bit more bullish for you. But if it's below, you'd probably, I don't want to say you'd look to go short because those are my words, not yours. But what target do you feel if we end up going short from 39.50, we end up at? Because I would love for us to get to 300 because it's a solid, even level. And selfishly, that's easier for me to trade from. But is that too far off, do you think, if we go ahead and move to the downside again below 39.50s?
It's pretty far. I don't know if it's too far, but look at this candle, how big it is. This is a green candle, high to low. We're talking, almost 112 points in the S&P. Now, we've seen the same phenomenon with these big green candles as well. So the idea that, oh, well, we can't get down to make new lows, it's too far away, forget about that. That can happen in 2 or 3 days.
Yeah.
We can. So what we want to see is a series of smaller candles, right? And that'll also help give us a clue on whether or not we're going to end up in a sideways channel like we did at the beginning of June or not. But on the downside, I'm going to stick with this. This is a really nice target, somewhere between 39.19 and 39.13, where my inside and outside fib kind of correlate. Yeah. And then as this ascending triangle continues to ascend, it's gonna approach that 38.2. It'll intersect it any day now, and we're literally 38.52 next stop down on a daily chart. I don't know if it's going to happen that way, but those will be 2 levels I'd be really interested in from a longer term point of view.
Now, when it comes to intraday trading, because that's what I do, right? I mainly do day trades and things like that. I love the 5-minute chart, but I absolutely love the 10-minute chart even more than that. I've noticed that you don't necessarily use the tick chart. Is there a reason that you don't prefer the tick chart, and that you prefer the 10-minute?
Yeah, so tick chart trading is an excellent way to go, right? So if you have tick charts up here instead of just a regular classic Japanese candle, that's okay. I just always found that tick charts were better for really shorter term moves that I'm comfortable with. Given how old I am, I'm slowing down in life, and I'm looking for 2 or 3 good trades a day. That's it. And I want to be patient, right? I'm patient. So that's why I'm looking at a time frame chart. I have 10 minutes up here right now, only because at the opening range show, we only have an hour together. So I want to make my trade decisions based on support and resistance on a shorter term time frame, knowing we don't have that much time together. If I was doing I don't know, let's call it a day trade that might take all morning as an example, I'd probably be looking at a 30-minute to give me some bigger perspective. So it's just your time frame pretty much.
And you like to go ahead and wait till the close of a level, I assume, right? Like, for example, let's just say you wanted to go long at 39.65 on this 10-minute candle. Right now, we're at 39.67. We are above that. Would you typically go long here, or would you wait a minute 21 for this 10-minute candle to close, and then you would go long? What's your process there?
No, I don't care when the candle closes. Well, I do care when the candle closes, but I'm looking at that VWAP and that 38% is my area of interest. That's where my entry would be in your example. So it'd be 39.65.75. That tells me there's price happiness there. There's a lot of stuff going on there. There's 2 areas of interest right there, close to the point of control. I want to wait. This market's so volatile sometimes. I just want to wait to get a little bit more juice out of the orange.
Yeah. Well, I mean, if we to finish things off, we got less than a minute. If you can go back to the Nasdaq futures, you've got the Qs coming right back up. It flushed down a little bit. Now it's coming back up. It may go ahead and get you some of those contracts to sell at the 12,368.75 level. You've also got VWAP around there as well. So definitely an area to kind of keep in mind. But you have any final thoughts here before we get going?
No, not really. I wouldn't change a thing on this except for maybe consider, hey, there's another area of interest now. This VWAP here, as it moves down, as the market moves down, it also might be a good entry. If you're a little bit more aggressive, you could pull that second unit down. You can make it a 2-unit if you want, that kind of thing. We've been trading below the VWAP, right around the first standard deviation bar, above the second standard deviation bar all morning long. At this point, until it changes, that's what I'm going to stick with.
Got it. Appreciate it. And that is Jim Cagnina, Senior Education Specialist and Trading Specialist over at NinjaTrader. Thank you so much, Jim. And we'll see you in a couple of weeks because you're going out of town next Monday.
Yeah, we'll be off next Monday, but the next Monday I will be back.
Sounds good. Appreciate everyone joining us for Futures Trading with NinjaTrader.